Hi everyone. I've got a solution here to the problem, and I don't know how, but I didn't realize that that problem included journal entries. There are no journal entries on the exam. Okay, so what I have are the numbers that I have here. Now your answers will be a little bit different, but I just want to show you how to do it. And I used to include debits and credits in this course, and you know, it's a big thing to get in your head. It's kind of nice because you really know the accounts when you're done, but for us to put time into this now just didn't make any sense, and it isn't anything that you really need for managerial accounting and what we're going to focus on after this chapter. But I did want you to understand what happens with purchases, and especially the financial statements in a merchandising business. Okay, so we have here's the first one we purchased. Just going to go through these. And if you want, you can just stop it. You don't have to listen to me, and you could just look at this solution, and probably figure it out from there. But I'll go through the detail in case you want it. So this first one is October 1st. We purchased merchandise from UK Imports. There's the amount, 14,448. Terms FOB destination. Okay, so free on board destination. And the important part right here is net 30. So the net amount of the invoice is due in 30 days with no discount. So we simply have what we call as a debit, okay? But just think of it as increasing inventory, increasing the payable. Okay, and you can sort of think of it on this account right here. This is what's called the T account. The assets increase on the left, or on the left side, and then liabilities and equity increase on the right side. Okay, it might be a little bit counterintuitive to you, but please don't break your head over this or think that this is something that your grade hinges on, because it really doesn't. Then the next one, we purchased merchandise from Hoagie Co. for $99.50. Terms FOB shipping point, okay, which means we've got to pay for the shipping. 210, 2%, you take 2% off if you pay it in 10 days, but the net amount is due at the end of the month. And prepaid freight of $220 was added to the invoice. Okay, now what they do here in this business is they record the invoices net of the discount. Okay, so the discount is already factored into the price of the merchandise. So then if you miss a discount, that's the kind of information you get, which is really a better way to do it. So we've got our $99.50 was the purchase price, minus the discount amount, which is $99.50 times 2%, plus the $220 in freight. So the amount is $99.71. Increase the inventory, increase accounts payable. Okay, I'm going to just keep going. If you've got questions, please don't hesitate to ask. For number 4, we purchased merchandise from Taco Company for $13,650. Terms FOB destination $210, net 30. So we can take 2% off this one. So again, increase inventory, increase accounts payable, and the total amount was $13,650 minus 2% of $13,650, or $13,377. Okay. Then in 6, we issued a debit memo to Taco for $45.50. $45.50. Wait a minute. $44,950. This is wrong. $44,950. What's the date on this one? 6/44/950. This is which one? A debit memo for $45.50. So that would be $45.50 minus the 2%, or $44.59. Okay? Yeah, $44.59, because that's how much we had it in at the net amount before. So this is accounts payable and a purchase returns. Okay, or you know what? If they're not using purchase returns, you can just decrease inventory. That's probably what they do, actually. Yeah. Okay, so just decreases inventory because now it's gone. We reduce the payable and we reduce what's in inventory. I am so sorry I assigned this problem. Okay, for 13, we paid Hoagie for the invoice on the 3rd, so that would have been the $99.71. Decrease the payable, decrease cash, $99.71. On the 14th, we paid Taco for the invoice less the debit memo. So that would have been $13,377 was the original purchase price, minus the $44.59 for the return is $89.18, and that's how much. $89.18 is what we would have paid. Let's get rid of this, the rest of this here. You want the part that's underneath there. Okay. On the 19th, we purchased merchandise from Veggie for $27.3. FOB shipping point, net end of month, so there's no discount. Debit merchandise or increased merchandise inventory, increased the payable. Then on the 19th, we paid, so the freight is a separate bill. Okay, we had a shipping company maybe do it for $400. So I've got freight in, but you know what? We're going to change this to merchandise inventory. And you know what the deal is here is all of the cost that it takes to get something in service and ready for use. What's this here? This isn't here. Merchandise inventory is part of the cost of the asset. Okay, so everything it takes to get that inventory ready to be sold is part of its cost. So that would include the freight. Okay, and then on the 20th, we purchased merchandise for $22,000, 1% in 10 days, net 30. And that's FOB destination also. So we would have 22,000 minus 1% of 22,000 is 2178.80 is what would go into the inventory account. So merchandise inventory 2178, account payable 21,780. And then on the 30th, we paid for the salad invoice on the 20th. So that would be a debit or decrease the payable, decrease cash for 21,780. And then, what else do we have here? We paid UK imports for the invoice on October 1st. So that's the very first one for the 14,488. 14,448. Decrease the payable, decrease cash. Okay, we had no discount or anything on that one. And then the last one, we paid Veggie for the invoice on the 19th. So that's this one here, and that's the 27.3 that was due. So decrease the payable, and decrease cash. Okay, so what you want to walk away with knowing or understanding a little bit about this is how, in the first place, the merchandise inventory account includes the cost of the merchandise, any shipping that's been paid on it, minus any returns. Okay, that's what would be in that account. Okay. And then it goes up back and forth between going into the payable, then coming out of cash, going into the payable, coming out of cash. It gets real routine after a while. All right, so I hope this helps. If it doesn't, just let me know what you need, okay? All right. Have a good night.